Hey, welcome to We Hate Insurance, the ongoing podcast and now YouTube channel. So I've got this fabulous screen behind me. This is not what my office really looks like, but I thought this would clean it up without me having to clean it. So today we're going to talk about insurance in general. The reason that we have this platform is because most of my clients come in, they go, "We hate insurance." And one of the things that we always love to hear as insurance agents is somebody come in and say, it's a scam. Insurance is just a scam. Well, in fact, it's not. I mean, I don't want to argue with anybody, but insurance is a contract where you, as a consumer, transfer some of your risk to the insurance company. And so just understanding that it's a contractual obligation and that it's based in contract law can give you some insight into how it can help you and how insurance companies have to make money. If they don't make money, they can't keep doing what they do. So you are paying money for protection. And this is pretty old. Life insurance actually started back in Roman times. And even before that, cargo insurance on ships was started even it's a long time ago, back in the 1400s, I believe. Uh, Somebody might fact check me on that. But anyway, at any rate, I wanted to go through the basic construct of the contract today so that you can understand how things fit, what you can expect from an insurance company, and what you should not expect from an insurance company. Number one, because it's a contract, it has several components. The first component would be it has um, a term. So it has a start date and an end date, and that's called the term. Now, this can be 1 month, it can be a year, it can be while you use the rental car for 3 days. It could be 6 months, which is pretty common auto insurance contract. It can be a year, which is very common for homeowners insurance. Um, it can be 30 years, which is a pretty common term life insurance policy. So the fact that it has a start date and an end date, that is what makes one of the components that makes a contract. It can't be open ended. It can't just last forever. It has to have a start and an end date. Now that's pretty easy to understand. Uh, the second thing that you really have to have is remuneration. That's payment. If money doesn't change hands, then there can't be a contract. So if you get insurance and you don't get around to paying the premium, you can't expect the insurance company to honor the contract because it's no longer a legal contract. So the exchange of money is an important part of that. If we didn't give the insurance company money, they couldn't call it a contract, and we wouldn't be protected under contractual laws. So there are also the subject of the insurance, which would be what's being insured. If that's not described correctly, then again, the contract could be null and void. So if you have a Chevy pickup truck and on your insurance it says Ford pickup truck, is there coverage or not? Probably not. Could be, maybe there's a mistake. We can call it a clerical error, but make sure that that part of your contract is correct. Make sure that the property is described correctly. Don't try and get over on the insurance company by describing it so it's less expensive so that your premium will be lower, because if you do that, then it's not described correctly, and if there is a loss, there'll be a payout that's less than you hope for, if there's any payout at all. Now, with that in mind, you'd be surprised how many times people call in and give me a name that is not really their name. Maybe it's a nickname, or perhaps they're what they would consider common law married to someone. So they give me their first name and their presumed spouse's last name. If that's not on your driver's license, if that's not your legal name, then that could also cause you to have some problems with your policy. So, if you're married and you've changed your name, that's what you give. If you're married and you haven't changed your name, that's what you give. If you're not married, don't say you're married, because a spouse, in the state of Indiana where I'm at and I practice, a spouse has specific privileges and rights and inclusions. So on a contract like this, the spouse is legally like an addition of you. It's just your spouse is you, and you are your spouse for contractual purposes. So if you're not really married and you say you're married, your spouse doesn't get all the rights and privileges, and if there's a loss, their property could be excluded. Maybe they bought the car and it's titled in their name, but because you said you were a spouse, it was insured in your name and them as a spouse, and then there's no coverage on the car. So if you have a different name that you go by for whatever reason, make sure you tell the agent that you're talking to what your legal name is. This goes for business owners too. You'd be surprised how many business owners come in and tell me that they have XYZ LLC. And as it turns out, it's XY and Z LLC. Small, subtle changes like that changes the name. If you go to the Secretary of State's website and you look up a name and it doesn't come up, then that's not a legal corporation. And if you insure something in the name of that corporation and that corporation doesn't exist, then you have a non-person. No one has the insurance. So if you have a business, don't shortcut it. Tell the person that is writing the policy for you what that company name is, and be sure it is. A lot of people, they create a corporation and then somehow in their mind it changes, or they do an LLC in one name and then they change it a little bit for their doing business as, or their DBA. Your DBA it can be added as a DBA, but your corporate name is the entity that you want to insure. So make sure that that's correct as well. Um, so you've got the basics of what's in there in the contract. You've got a term, start and a finish time. You've got remuneration, or the payment of money, and then you have the description of the property and the description of the insured, and all that has to be accurate. So if your description of the insured is right and the property is right, and you've paid a little bit of money and you know what the term is, that final piece of what makes a true contract is going to be the terms of the contract. This is what trips up more people than anything else. Um, taking auto insurance, for example, if you have a contract that says that you can loan your auto to anybody and they'll have coverage, but that coverage will be drop down limits. This is a really common thing. Most companies do it. They don't know who you're loaning your car to, and it could be somebody that has a really bad record, but they don't want to, get rid of your coverage altogether and not allow you to loan it to somebody. So they do what's called drop down limits, and they'll give uh, the person that you loaned it to, your friend or family member, coverage up to state minimum amounts. So let's say you have 250, 500 for your bodily injury liability. In the state of Indiana, the minimum would be 25,050 for that bodily injury. So your person that you're loaning it to, let's say it's a cousin that comes into town, you loan it to them. Instead of having that 250, 500, that bigger coverage, they'll have state minimum of 25,000, 50,000 for bodily injury. If there's necessity to go over that, a lot of times it's their their personal policy, if they have one, will become involved in that as well. So it's just a way to limit the amount of exposure for the insurance company, which helps control your premiums, because the lower the risk to the insurance company, the less premium they're going to charge you. The description of these terms is found in the policy paperwork. So you have to go and look at the policy paperwork. You have to look at the exclusions and the additions. The additions are called endorsements. And so there'll be a whole section called endorsements. So you have the basic policy language that says, we'll insure your vehicle. And then you have the exclusions. We'll insure your vehicle unless you are robbing a bank, or whatever the case may be. And there'll be a whole list of those. And then they'll add some coverage back in by saying, we'll insure your automobile unless you're robbing a bank, unless you were forced to at gunpoint, and then we'll cover it. So it's back and forth like that. And that's how contracts are all written. They broadly base all the terms, then they take away some coverages to limit the exposure, and then they add some back in with specific circumstances. Then when you want to add additional coverages, you're going to add an endorsement. So if I wanted to add, um, boombox coverage on my auto policy because I got a cool boombox from the 80s, then that would be endorsed on as additional equipment. And you can endorse a lot of different types of coverage on. Let's say you have employees that use your vehicle on a regular basis, or you ask your employees to go and do stuff in their vehicles. You can add a coverage called hired, uh, or a coverage called non-owned, or a combination of those two that would cover all of those instances. So it's worth having a conversation with your agent to make sure that you understand, what your coverages are, what the exclusions are. But more importantly, you want your agent to understand what you are using this vehicle for, how you're using it, who's going to be using it on a regular basis. And then together you can work through it and make sure that you're covered appropriately. Now, finally, when you're talking about an insurance contract, you've got all those components that we talked about. But just like I was saying at the end here, um, everything's very specific. It's for you. People ask all the time about, hey, I got a newer car than they do, and I pay less insurance than they do, or they've got a newer car than me and they pay less insurance. Theirs is worth more than mine. Insurance scoring is based on a lot of things. One of the things it's based on is credit scores. I don't have anything to do with that. Don't yell at me about it. Don't yell at your agent about it. They can't do anything about it. Some people say, oh, my credit scores are great. Well, maybe they are, maybe they aren't. Doesn't matter. There's nothing we can do about it. If there is an error in your insurance score, then you have to go directly to the reporting agencies. One of the biggest ones is LexisNexis. And you can go right on there and you can log in and see your information, and you can submit and tell them if there's an error on your file. The insurance company can't do that for you. The agent can't do that for you. Nobody can do that for you. The only way that you can correct it is to correct it on your own. And the only way you'll know if it's correct is if you run that score, if you go to those vendors and find out, are you listed correctly? There's a lot more that goes into it, though. There's also your loss history. Have you had a lot of accidents? Have you had one recently? Have you shopped around to buy for an automobile? Well, if you've done that, that can hurt your insurance score. All of these things go into effect. Um, there's 179 different data points that they go and look at. So there's no way for an agent to be able to tell you exactly what it is that's causing you issues. But insurance scoring is part of it. The other thing for pricing is insurance companies, carriers, they look for the value of the vehicle, um, the the coverages that you're taking on. So if it's a very valuable vehicle and you've got collision coverage, that will be reflected, because if you have a collision, it means that replacing it's going to cost a lot more money. All of that means that not everybody is paying the exact same price. And while we share some of the burden of damages that are paid out over the whole course of the year, it means we're not specifically tied to all the biggest damages. So, like, I haven't had an accident in years and years. Let's say 20 years. I haven't had an accident. That's going to be reflected in my premium. It's going to be lower because I should pay less premium than someone who has multiple accidents, or someone who has even a member of their household that has multiple accidents. So premium is based on a lot of different things. You have to have a conversation again with your agent, talk to them. Just wrapping up, I will say every time I talk to you guys, I try and hit on the fact that you need an agent. You need a live person. I had somebody come into my office and say, "Hey, this AI stuff, it can even do your job." Well, yeah, sure, it could probably pick out coverages, even ask you what your deductibles are, but it can't give you advice based on your specific situation, looking at your risk tolerance. do are you okay with a lot of risk? Do you have a grand or two that you keep in a safe in the house that you can use for your deductible? Do you live in paycheck to paycheck? Do you need that little extra money so you need a lower deductible? Do you have young kids in the household? Do you have somebody recommending what you need to do? Because young kids have accidents. That's just the way it is. So while AI could make some recommendations to you, you can't really trust them, because that AI doesn't know who you are. It doesn't know anything about your specific situation, your risk tolerance, and where you fall in the spectrum. So I hope this is helpful understanding insurance contracts. We talked a lot about auto contracts. The same basic principles apply to life insurance and homeowners insurance and even commercial insurance. Make sure that all the data is correct. Make sure the name is right. Make sure your date of birth is right. Make sure that the name of the company is right, the address, the description of the property, all that needs to be correct. Make sure you understand the term. Know that there has to be some kind of money exchanged, or it's not a legal contract, and understand the conditions and terms of the contract so that you can know what the limitations are and what it'll cover and what it won't. There you go. So check us back next time. We'll talk about some more stuff. We'll try and make insurance suck a little bit less so you can understand it better. So take care.